we are going to be kicking off the session with a keynote. The keynote is brought to you by John Spottiswoode, and he's the Chief Operating Officer of Jerry. The interesting thing is that when I saw John this morning, I said, "Hi, Jerry, how are you?" Because he's got the name Jerry written on his shirt. So I thought, oh, does this guy really want to introduce himself to all of us? But he said, no, my name's John. It's like, okay, I think I'll remember that. But look, John, or Jerry, is going to be sharing Jerry's vision. It makes you sound like you're one of the same, really, doesn't it? But look, we'll stick to John, yeah? Fantastic. But John's going to tell us about Jerry, the vision it has going forward, what they're doing so far, and their plans for 2022 and beyond. So that's the broad brush outline. I'm going to leave the rest of the talking to him, and what's even better is that he's taking questions at the end of this. So can you please give a huge welcome to John Spottiswoode of Jerry's. Hi, come on up. It's all yours.
Thank you very much. I actually get that a lot after people talk to me. They say Jerry, and then, oh, I mean John. So thank you all for coming, getting here early after a Monday night in Nashville, which I'm sure for you as well as for me is like a Friday night at home. And I want to start you off in a good mood, so close your eyes for a second and think about the summer vacation you have planned. The beach, the mountains, maybe great dinners with family and friends. And then scratch that and imagine if the shopping experience for that summer vacation had been something like this. You go online and you try to book your flights, and instead of just needing your destinations and the times that you need to leave, you instead need to fill out pages and pages of information. You have to enter the names and ages of all the travelers. You've got to put in passport numbers and frequent flyer numbers. You need to say what type of plane you're willing to fly on. How many stops. You're asked for how many miles you've flown in the last 12 months and whether or not your frequent flyer program has ever lapsed or you've missed a flight before. After you get through this entire process, you're brought back with a number of quotes from different airlines. You click on those and you have to enter a bunch of more information. In the background, they're running a background check and a credit check on you so that at the end, the price of your flight has gone up substantially from what you were quoted. So you have to go back to every single airline, click through, go through the same process, take notes on the prices, put them in a spreadsheet, and when you finally decided which one is right, you got to go back there and hope that it's still available and that the price hasn't changed. And then, if you want to get a rental car or a hotel, you've got to go to an entirely different site because that particular agent or broker doesn't do that work for you. Of course, that's not what you experienced when you booked your travel this summer. But that is, outside of Jerry, really the experience that most customers have when they want to purchase auto insurance. It's just really, really difficult to purchase auto insurance online. And that's really, and then if you want to get a quote on a refinance of your loan, on a new vehicle or a used vehicle, or a repair, anything else related to your car expenses, you have to go somewhere else because insurance agents can't help you with that. This is really the problem that we've founded Jerry to solve. Let me click to the next slide here. Okay, it worked great earlier. There, oh, now I gotta go back. Oh. So, we're building the super app for car insurance and car expenses in general. If you're not familiar with this, a few of you have told me you're customers, which is awesome. If not, I'd encourage you to go on to Jerry. You can go to getjerry.com and give it a try. Essentially, we started with car insurance, and in 45 seconds, you can get quotes back from multiple carriers, and you can purchase your policy online in 10 minutes without talking to anybody. In March of this year, we expanded into auto refinance, and we're also building other vertical marketplaces for other car expense categories. Unlike many of you, I'm not an insurance expert, didn't come from an insurance background, and neither did any of our founders. But the experience and perspective we do bring is as car owners and insurance policy holders. And that customer perspective is something that we've brought to the way we build Jerry, and it's what I really want to talk about today, is building your business and your product from a customer perspective. So I'll start with the mission of Jerry, which is to make it easy to save time and money on your car expenses. It started when our founder, Art Agarwal, came to the United States for college and had the good fortune of being able to purchase a car. He came from India, where at the time, even riding in a car was kind of a rare treat, and owning a car was a dream for most people. But his dream came true and then turned into a bit of a nightmare in the United States. First, he had to figure out how to buy a car, right? What car should he buy? Finding information on it. And then having to go negotiate with dealers to make the purchase was, needless to say, not fun. He had to finance the vehicle, and coming from India, he didn't have much of a credit history, so it was extremely expensive. He didn't understand what an APR was or how to think about a lease versus a loan. He had to decide whether or not to buy a warranty. Did he even need that? With insurance, he knew he needed it, but he didn't know how much coverage he needed, and he certainly didn't know how much it should cost him. And when he went to get repairs, again, it's a question of, am I being told what is true, or is this something that I really need? The list goes on. It was just very, very difficult for him to manage his car expenses. And he thought, does it really need to be that way? Can I make that a better experience? Especially in an age where I can call a taxi in 2 minutes with my phone. And that's how Jerry got started, with a focus on making it easier and better to save money on your car expenses. We like to think of it as trying to put it on autopilot. So attacking it from a customer perspective, we knew that what customers would want is a magical experience. And that's not something that you typically associate with car dealerships, insurance companies, or banks. So we focused on one of the hardest areas first, which is insurance. We wanted to make the process so that customers would not have to enter any of that detailed information that I discussed earlier. So we went out through a combination of third-party APIs with third-party data sources and machine learning to simplify that process so that a customer just enters their name and phone number, and all of the information about their cars and drivers and coverages comes back automatically. They have to review it, but they don't have to enter it, which saves them a tremendous amount of time. We knew that they would then want to be able to go through and buy online, and so we streamlined the binding and checkout process so that that could all happen within our app without having to talk with an agent. And finally, we knew they wouldn't want to make the call to break up with their old agent or carrier, so we automated that process for them as well. And the net result is we've had over 2 million customers use Jerry and hundreds of thousands purchase policies through Jerry over the last 3 years. That wouldn't have happened without overcoming barriers. As both executive in public companies as well as in high-growth startups, I know the most common barrier you run into is people telling you that's just not how it's done. We heard this from everything from our venture capitalists to the carriers to industry experts we talked to, even prospective employees who said that's not how it's done in the insurance industry. But the key is we kept pushing, questioning assumptions, and getting people to give us an at-bat, to let us try. And it usually worked. So an example of this is we knew that we would need the customer's prior coverage information in order for them to be able to compare a quote with their existing coverage. But prior coverage information isn't something that's available to brokers, even if you want to pay for it. So instead of making the customer enter it, which we knew they wouldn't remember it, we decided to build a predictive model based on all the information that we could pull to predict what their coverage likely would be. And we found we could do that with about 75% accuracy. And then over time, as we would show them the coverage and they could tell us if we got it wrong, the model has gotten more and more accurate to the point where it's over 90% accurate at predicting a customer's prior coverage. So examples like these, when we just don't accept the status quo, we've often found that things are in fact possible. And at the end of our first year, our largest carrier threw a party for us for hitting our 10,000th policy sale. First company by a long shot, first broker to get to 10,000 policy sales. That wouldn't have happened without overcoming those barriers. Of course, we did ultimately have to hire insurance experts to complement us, but we didn't look for people that felt like they knew how things should be done. We looked for people that really wanted to figure out the best way to do things, to identify problems and to solve them. So essentially, we looked for squeaky wheels, people that wouldn't settle. And we looked for that from the frontline service agent all the way through to our executives. Everybody at Jerry on their very first day reads our product manifesto, and they then spend an hour with myself and Art, our CEO, talking about that product manifesto. And we tell them that their second job is as a product manager. And we make that possible through a flat culture. So that may sound a little startup-y and hard to imagine in a big company, but essentially what it means is not that we don't have titles or layers, but that everybody's empowered to solve problems for the customer. So for example, at Jerry, if a customer calls in and a service agent picks it up and identifies a problem, they not only can solve the problem for that customer, but they can immediately get on the phone with an engineer, discuss the problem, think about solutions with them, and get it solved. And that saves a tremendous amount of time. It also reduces a lot of miscommunication. And it's incredibly rewarding for the employees because they can see the problem not only solved for that customer, but for all future customers. I've had agents that came to us from large carriers tell us that they can get done at Jerry in days, things that would have taken years at their prior company. And not because we're so much better, but just because we listen to and pay attention to the squeaky wheels. So listening isn't something that's revolutionary, but most companies don't do it enough. A.G. Lafley, who's the very successful CEO at Procter & Gamble, reinstituted customer calls for his executives and product managers when he found out that they were only spending 3% of their time talking to customers. The CEO at Tesco spends 2 days out of every week in stores talking to customers. And the CEO at Walmart, when they were launching their in-home delivery, personally spent weeks delivering groceries to customers to understand what the issues would be. Harvard Business Review says that executives should spend 10% of their time talking to customers. How we do it at Jerry, every executive spends 2 hours a week in a group listening to calls from customers. About half of them are identified by our agents as calls that we should listen to because there's important issues that are identified. The other half are at random so that we don't get a biased sample. We also spend time every week talking to customers and users about specific areas of our product that we know need to be improved. Once we started hearing consistently that the insurance process was at least getting to be magical, we decided to focus on a second problem, which is auto refinance, a really kind of a hairy area and one that's very expensive for customers. This is going to seem unbelievable, but today in the United States, it takes on average 19 days to complete an auto refinance. That's for something that is mostly and should be a completely digital process. We so far, through a combination of automation, artificial intelligence, and leveraging what we've done in insurance, have brought that down to 2 days, so 48 hours. But that's still a really long time to complete a digital process when you can actually have a physical product delivered to you from Amazon in an hour. Our goal is to get it down to 19 minutes. I think that's completely feasible. It's what the customer expects, but it's going to take a lot of work and a lot of collaboration and listening to our lender partners. And that's an important point for a broker, is you really have two sets of customers. You've got your end customer, the consumer, but you've also got your business customers, which in the case of refi is lenders. In the case of insurance, of course, it's insurance carriers. And we've learned a lot from listening to our carriers over the past few years. Some of the important changes we've made from listening to carriers include extensive quote filtering. So if a carrier wants customers only in New York State, but not in certain zip codes in New York City, with a credit score above 600, and has prior insurance and BI from 50 to 100 and above, literally down to that level of detail, we can filter just on those quotes. Fraud management tools, so we've built those such that today we have literally 0 fraudulent quotes coming through, which of course saves our carriers a lot of expense. Active loss management, so we receive loss data back from our carriers for our book, And then we use that information to both optimize our marketing as well as the carrier filters to ensure that we're delivering a profitable book to those carriers. The things we like the most are when we can solve both a customer problem, end customer, and a carrier customer problem. So for example, we have a very high emphasis on e-signature and telematics adoption. We're the #1 broker in the country for most of our carriers on adoption of these two important programs. And they're good for the carriers because they save the carrier cost. They also improve retention. And they're good for the customer because they typically mean a better quote. Violation data is something that we implemented more recently. So currently, when you go through the quoting process, if you tell us that you have a violation, we now pull back the actual violations for you to review and approve, and then we submit those with the initial quotes. Of course, this raises the initial quotes, but it makes them more accurate for the customer so they don't see a big jump between their initial quote and their binded price. And for the carriers, it saves a tremendous amount in MBR costs. So again, a win-win for both the carriers and the customers. Our North Star is that everything we do starts from a customer point of view and a customer focus. Every feature we look at and ask, does it save time, does it remove hassle, or does it save money for our customers? And if it doesn't do one of those three things, we just don't do it. No gimmicks at all. Sometimes we have to push hard with our carriers or our lenders to agree to letting us try a new process. Typically it works out by either improving retention or value for the customer or for the carrier as well as the customer. A couple of other tactics we use to stay aligned with that North Star. Our CEO listens to small groups of our agents every week and talks to them about issues that they couldn't just solve that day with an engineer, but that require a bit more of an architectural design. And in addition to that, we have a Slack channel, an ideas Slack channel that any employee can post to. And we get about 50 validated new ideas every month coming through that Slack channel. So I've talked a lot about Jerry, but at the end of the day, what I really hope is that you come away from this thinking about the importance of looking at your business from the customer's point of view. I hope that you will rethink the insurance shopping experience because it isn't as good as it could be, and that you'll reinvent processes that cause the customer pain. Those things will be really valuable for Jerry if we work with you, as well as for your existing direct, captive, and/or independent agents. Together, if we all focus on this, we can make that insurance shopping experience equal to or better than the travel shopping experience. So thank you for your time and listening this morning.
Thank you. Okay, John, I have a couple of questions which have come through. Please be seated.
Thank you.
You've been on your feet for a long time. Are you ready?
Yes.
Okay then. Comparative rating typically highlights price above other aspects. How does Jerry create equality to balance coverage quality / service experience with cost?
So what we find with our customers is that cost is their number one priority, meaning if they can't save money, they typically won't switch. But they care a lot about convenience. That's number 2, so having an easy experience. And we enable that through, obviously, as I've described, really streamlining the sign-up and purchase process. But we also enable a lot of easy service within our app, so users can add cars, they can add drivers, they can make ad hoc payments through the Jerry app, and we then feed those through to our carriers. So it also is focused on convenience. We also find that we try to provide information about ratings on our carriers within our app, both from information we get back from the carriers as well as ratings from existing Jerry customers with those carriers. And we do find that customers care about carrier brand and carrier reputation, and that's probably the third thing on their list is price, convenience, and then carrier reputation and ongoing service.
Okay, fantastic. Another one? Ready?
Yeah.
Great. How concentrated are you with your carriers? Is the top carrier more than half of your sales?
It's a very good question. The answer is no. The top carrier for us is between 25 and 30% of our sales. In total, we have almost 50 carriers. That's across both home and renters as well as auto. And our smallest carriers will have, you know, 0.5% to 1%. I don't think we have any carriers that have less than 0.5%. But we're doing enough business that for those carriers, which are typically not in every state, even 0.5% is still a meaningful amount.
Mm-hmm. Who does Jerry look to as a leader in the super app field?
So honestly, most of the leaders are Chinese. I don't know if you guys heard the Ping An, you know, but you can imagine
we were on
if
yesterday, in fact.
Yeah, Ping An. If you can imagine an older school insurance company doing that much innovation, you can imagine that the startup super app companies are really amazing. WhatsApp is probably the most impressive sort of super app of any company, but there are a number in China that are quite impressive.
Mm-hmm. Okay, we've got time to squeeze in one more.
Okay.
You mentioned tracking loss experience. Are you tracking retention or average length of time they stay with the carrier? Any view of lifetime value for your customer base?
Yeah, that's actually super important. So we have a model, another predictive model, that predicts the lifetime value of the customer. We have one that does it after the customer has purchased from us, so that's a user switch or a customer lifetime value. We also have a predicted lifetime value at the point at which they've completed the onboarding process and gotten quotes. So that includes looking at both what's the likelihood they're going to switch, and also what will the long-term retention and value be after switch. And we feed that information back into our marketing channels. The reason we have both is because, for example, with Facebook, we can't feed in the lifetime user value, but we can feed in the predicted user value at onboarding. And what that then does is it biases Facebook to, for example, to bringing us back customers that will retain with us a long time and have a long lifetime value. And as we've kind of closed this loop, what we found is the average credit scores of the customers that are coming through and the retention of the customers that are coming through are much longer because we're feeding that predicted lifetime value back in through our marketing channels. It's actually a really important part of what we do.
Okay, look, John, thank you so much for that. John Spottiswoode of Jerry.
Thank you.
Thank you so much. Brilliant, thank you. Okay, so we've had the first of our keynote speakers. Let's get ready now for the second keynote address. This presentation has been delivered by Evan Segal. Now, let me tell you a little bit about Evan. He is the VP of Financial Services at eGain, and he's going to be talking about how eGain is transforming the agent and member experience with knowledge innovation at scale and also at speed. It sounds incredibly intriguing. Put me out of my suspense. Evan Segal, can you please give him a big warm welcome? Fantastic to see you.
Thanks a lot.
Great.
Well, thanks for that introduction, Juliet. And after last night and the last couple nights of going out, I almost feel like I should sing my presentation, but I will spare you that pain. No, you do not. You do not. So Julia explained what I do at eGain and what I'm going to talk to you about today, but I also want to give you some context. So I used to be sitting in many of your seats in that I was in industry. I worked at a mega bank. I was on the leadership team of our contact center, and a lot of the pain that I'm going to talk about, I have personal experience with. In fact, I can show you the scars on my back from trying to solve some of these issues. I also worked with the enterprise's omni-channel strategy. And so I have sort of this 360-degree view of how you need to deliver customer experience, both in a contact center and digital. And that's baked into what I'll talk about. So let's start with what Gartner is researching and talking about. You know, they're their IT experts. And they say that digital transformation is the #1 goal of CIOs. So I'm sure many of you have gone off, your CIO says it, let's go off and do digital transformation. You march out there, you do journey, use cases, journey mapping, stand up new channels, but let's go back to that CIO. What do they say? They're not getting the business results they expected. What would you expect when you get digital transformation? What kind of business results? Massive call deflection. You would expect to get dramatic increases in first contact resolution across channels, and you would expect to get a really great improvement in Net Promoter Scores. That's not happening. Why? Well, let's look at some of the experts. What Forrester says is that it's not easy for customers to get the answers that they need. We have gone deeper and done some research across channels surveyed hundreds of customers and business experts, and what we see in the insurance industry is that 62% of insurance customers complain about getting different answers from different touch points. Okay? At my mega bank, we had this data science expert, and he would look at what people were doing using all these great analytics, and he saw that 70% of customers were online before they called the contact center. So if you're getting different information across channels, that is a horrible customer experience, and let alone in your industry, a highly regulated industry, possibly a compliance violation. By the way, that 62% is the second worst of all the industries that we surveyed. Okay, let's get going back to Gartner, and what they're saying is that in self-service, 90% of the times, customers, this is digital self-service, abandon their search because they're not finding what they want. Finally, PwC says that for insurance, 42% of customers will switch providers if they're not getting the digital tools they want. Let's put the statistics in context. Why is this so dramatic for your customers, and why are your customers saying this? First of all, you know, Amazon and all those companies are teaching your customers what digital service can be, what the art of the possible is. Let's face it, insurance is not a fun topic, it's a scary topic, and it's not something that people deal with a lot. So when you get this type of customer experience in that industry, that's a recipe for disaster. Next, let's go to the agents. 65, this is again from our eGain survey, 65% of agents cite knowledge-related issues as a top pain point. What does that mean? Knowledge basically means I don't know what to do to solve this customer's issues. I don't have the resources at my fingertips, 65% of the time, to solve my customer's issues. Then let's go back to Gartner. What they're saying as they survey contact center agents, they're saying, those agents are saying that basically my tools stink. I've been in a contact center. It amazed me, and I was talking to some of you folks yesterday. They'll have 7 windows open on their desktop, and they're toggling back and forth while they're talking to the customer and trying to solve that. How horrible is that? And again, let's put that in context. All these millennials and Gen Zs that work in your contact centers, they carry a supercomputer in their pocket. So that's the level of technology solution that they're expecting for you all to provide them, and they're not getting that. Next, let's go to the business. That's you all. What's your experience, and why aren't you getting those results that the CIOs talked about? Basically, you've got remote work continuing. That's the new future. You've got the great retirement, so all this expertise is walking out the door, and you have training being transformed. Okay? So that's a really difficult environment to operate in, and it sort of makes your job of getting that CIO results even more dramatic and more difficult to do. Okay, so how do you get those digital transformation results that you need? I'm going to argue that the missing ingredient is knowledge, and I'll explain what I mean by knowledge in a second, but let's go back to Gartner. What Gartner says, and again, this is a powerful statement because they look at hundreds of technologies. This is their business. They're constantly evaluating all kinds of vendors. And what they say is knowledge management is the #1 technology that can simultaneously elevate customer, agent, and business experience in 2022 and beyond. Think about that and let that soak in for a second. This is a solution that can get your CIOs happy, your C-suite happy, and give you those digital transformation benefits that you desire. So what exactly is knowledge management? You can read what's on the page. I'm going to tell you my simple definition of it. My simple definition is if I'm a customer and I have a question, I get the question answered in a way that I understand, if that's digital or by an agent. If I'm a customer and I need something to get done, some sort of process, some sort of issue resolved, I'm told what to do, where to go, and I understand those instructions. If I'm an agent, I'm told what to do in a very simple, error-proof way, and I'm told what to say so I can stay compliant. That's what knowledge is. That's the soup that gives you that end result. So let's go back to Gartner one time, because not all knowledge technologies and solutions are the same. Gartner wrote this extensive report And they basically said there are 7 key ingredients you need to have a successful knowledge management implementation. All of these are equally important, and you need to have all 7 to be successful. So let's expand on a few of these. The first one is outside-in thinking. What does that mean? This is a popular concept now, outside-in design thinking. It means that you need to walk a mile in your customer's shoes. You need to design things the way they act and the way that they do. So I'll also, as I explain these, I'll tell you how our company has solved that. Our company, eGain, has solved this solution. So we have a rapid prototyping technology. I'll talk about it at the end. It's called IITD. It's a way where within a month we can take a slice of capabilities, stand up a working solution that your customers or your agents can bang on. That rapid prototyping capability allows you to do this. Let's walk in a mile of our customer's shoes. Let's see if, in fact, it delivers what they think. If not, let's tweak it. Okay, so you can really have that design thinking. The second one is knowledge-based consolidation. Every one of your companies, especially if you're an enterprise, you don't just have one knowledge base, one capture of policies, procedures, and know-how. You have multiple solutions of that, multiple data dumps of knowledge. The way our technology consolidates all that knowledge base is a lot of ways, but let me just talk about a couple. One is we have mirroring, so we can take all that knowledge, mirror it into our solution. We can load the knowledge into our solution. Or my personal favorite is we can do federated search, where as the agent is trying to figure out what to do, we could go search all those relevant knowledge database and get just the exact information to that agent so they can solve the problem. Next one is search engine optimization. Look, again, let's look at what people have been trained for. By Google, you've been trained to have just those top 4 or 5 search results that are super relevant. That's what you expect, right? So we have multiple layers of capabilities that we use to deliver that type of result. For example, we can recognize intent of the search. We tune that over time so that gets very accurate. And if we don't recognize the intent, we have an AI capability to ask the exact right questions to clarify what's the intent, what's that agent or what's that customer really trying to get to. Let's next go to my personal favorite, the guided experience. It's not just sufficient to give your agent or your customer, here's the answer, and spray out a bunch of stuff. We walk them through step by step, bite-sized, error-proof way, do this, say this, so that the agent, if that's the example, can meet the customer's experience and solve the issue in first contact. And with the customer, they can explain to them and show them exactly where to go. Next, let's jump over to virtual assistants, virtual chatbots. It's necessary if you want to get the call deflection, but not all chatbots are equal. We incorporate context into our chatbots, which means we can get highly personalized results. Context means, for example, if you're online digitally, we know where else on a website you've been. We take that into account when you ask your question. Likewise, we can authenticate customers, and we can suck information from our CRM system, so if they're asking questions about their policies, we can be highly personalized in how we answer that via our chatbot. But we've gone beyond just those 7 key attributes that Gartner has talked about. We have introduced something we're calling the Knowledge Hub. The result of this Knowledge Hub, which reflects eGain's 25 years of doing this, is that it's got all of our best practices, a very friendly UI baked into it, such that your agents and your customers will say, this is really easy, this is fun, and that's important because a solution is only as good if it's implemented. So what exactly is the hub? A knowledge hub is a single harmonized platform for managing knowledge. Think about that. One platform your entire enterprise can use, which means you connect and collect information, know-how, policies, procedures once. You automate and add intelligence once. And that intelligence is like that step-by-step process guidance. You manage compliance once. You don't have all these silos where your compliance folks have to go and look through the policies and procedures. You're doing it into the single source of truth. You profile then and publish with this guidance, this intelligence, the one source of truth out everywhere. It's a much more efficient way to manage your policies and procedures and get those results your CIOs are wanting. And very importantly, like we have, you have analytics to track continuously and improve to make sure your knowledge is explained and utilized in the best way possible. But a knowledge hub holds a lot more than content. Let me give you a few examples. One, as I talked about, it is omni-channel content. So it can be farmed out direct to the customer via digital, web self-help, or it's shown to your agents or even internally to your internal folks to get the answers they need. It's AI-driven conversations. A lot of times when customers ask questions or when the agent's starting to engage with the customer, they don't know sufficient information. Our solution has AI power to know what's the best question to ask to clarify. As we collect that information, we know what's the next best question to ask, and then we're able to get the result or the process guidance that that customer or agent needs. We also have something called profiled access. Not all agents, you know, right, in your contact center, some of them are grizzled veterans, if you will, and they know what they're doing. They'll find that constraint of that really bite-sized, error-proof, step-by-step guidance a little constraining, so they don't want that. So what our solution has, very easy, it's not IT required, the business users can do it. You can set up a profile and say, this person's a new agent, give them that great detailed access. This person's a veteran, give it a little bit higher level guidance. So you get that sort of high team member engagement that they want. So let's kind of summarize what is the hub advantage, and let's compare it to what if you don't have a hub. If you don't have a hub, you have point products, and you have set silos of knowledge. That's chaos, that's expensive, and that's not going to get the results your CIOs expect. You have solutions that require extensive development. If you go with a company that's been in this for a long time, like eGain, you get the best practices, you get the professional services that know how to implement this, and it's a solution that can really deliver the results that your CIOs want. So what do we see when our clients implement these as the solution? Knowledge management as a part of their digital transformation. It's really stunning results. And I'm going to go back to my mega bank days. You know, we would slave away to get a couple percent improvement in first contact resolution. We would work months to get a couple of percentage point improvement in Net Promoter Score because we didn't have a powerful tool like this. What we see with our clients are 10 to 35% improvement in first contact resolution, 18 to 30 point improvements in Net Promoter Score. These are stunning results. We've actually had our clients go on stage and cite these results. 50% improvement in agent training time, reduction in agent training time. You don't need to teach them all the policy and procedures because it's presented to them in a step-by-step way. You get this 100% audit trail, which in an industry like insurance, super important, right? You know why the agent said what they said, and you have all the details behind it. And for the digital channels, we see 70% call deflected, the type of results that your CIOs will be delighted with. We have, by the way, and this is my personal pet project, we've taken the hub and all those secret sauce of knowledge management even one step further, and we've created a virtual coach. Basically, it's ongoing engagement. We've done it first in the financial realm, where we have a virtual financial coach where it teaches people how to build credit, improve credit, save more money. Really powerful. It's a platform now. We can use that in the insurance industry to how to file a claim, go through there, teach the customer on an ongoing way what they need to do. So I just wanted to get that out there. It's a very cool solution, and we'd be happy to show that to you as well. Let me close by saying I hope I've intrigued you a lot about knowledge management and how it'll help you deliver the digital transformation results that you have. I would encourage you to come by our booth here. A picture is worth 1,000 words. See it in action, see what it really looks like. And to kind of further whet your appetite to engage with us, we have this special program called IITD. If we work with you, find your business problems, we can take one of your use cases, spin it up, 2 weeks, get a working example of our solution that your team members can bang on, your customers can use, and you can see the power of knowledge management in your business. Thank you very much.
Thank you, Evan. I have a feeling you're going to be swamped. You set yourself up for that with that invitation. You're going to get swamped. You set yourself up for that with that invitation. Thank you so much. Great presentation. I think he deserves another round of applause. Thanks ever so much for that, Evan Segal. Now we're going to take another dive into an ecosystem. The navigator-in-chief on this one is Rose Hall. Let me tell you about Rose. She's co-founder of the AXA XL North America construction ecosystem, and her presentation is looking at the journey of the ecosystem from its conception to the present day. I don't want to give away too much, but she will look at how customer service lies at the heart of the concept and how the ecosystem is redefining the role of the insurer from a transactional commodity to a partner in risk with customers. So please give her a huge welcome. Rose Hall, please come and join me on the stage. You can't do your presentation without this.
All right.
It's all yours.
Thank you. Hi, everybody. I'm Rose Hall. I'm VP and Head of Construction Innovation for AXA XL. AXA XL is about a $10 billion company that insures primary casualty, mostly commercial lines. We're owned by AXA Group. We were purchased by AXA Group about 4 years ago, and anyone who's overseas knows AXA Group. They're about a $100 billion, very, very large, global, mostly personal lines insurer, and they wanted some commercial lines presence, so instead of building it, they bought us. It's been a great journey so far. They've done a lot of things right, and one of the things that we've been able to do is develop this AXA XL construction ecosystem, which is focused around a little bit of a different innovation journey than just about insurance. We've taken a different approach in that we are interested in innovating our customers. When our customers are more innovative and their innovation leads to less risky behavior and more profitability, we too will have better risk results and more profitability. So we're focused on the customer's innovation as opposed to our own innovation, and I'm going to tell you about that today. By way of background, I'm a civil engineer by trade. My undergrad and my graduate are in civil engineering with a focus in construction. I'm told there's no cure for this, but we're still looking. I came up through the ranks at Turner Construction, about a $14 billion international construction company. And at some point in time, someone said to me, would you like to interview to be in the risk management group? And I said, I have to interview within my own company. They said, yes, because risk management is not like building buildings. I spent 4 years in risk management liaising between the business units and our insurance partners and learning what it means to manage risk for a business that has a tremendous amount of risk and makes about 5% fee. It's absurd. So when we think about the focus of a construction company, they are primarily focused on delivering their schedule, delivering the project on schedule, on budget, with the least amount of injuries possible, with the greatest amount of quality, and they do it for very, very slim margins. So their tolerance for risk, pretty small. Their tolerance for innovation, even smaller, because they can't afford to fail. We built this to help them. So we started with a concept we call payer to partner. The idea behind this is to go from simply being a transactional, commoditized payer of claims, which is how insurers are traditionally seen, to being a true partner in risk. And this came down from AXA Group many years ago. And so we thought, in the construction business unit, has been about 12 years old. We have underwriters, we have claims professionals, and we have a team of risk engineers. And our risk engineers are subject matter experts in construction, and they've been helping our contractor customers better their risk since we've been in business. We're their consultants. They call us all the time and they ask, how do I best do this? What are my peers doing? And how do I better manage my risk and protect those teeny tiny little profits we make? Lately, they've been coming to us in the last couple of years and saying, I don't just want to know about risk, I need to know about tech. What is going on with technology in construction? 10 years ago, the biggest problem in technology and construction was there wasn't any. Now the biggest problem is there's too much. What do I do with all this tech? Which one's the right one for me? How much should I be paying for it? What's the ROI? What do I do with all this data? Is it scalable for my business? We're a unique little snowflake here in our construction company. We do things completely different than everybody else. How do you solve for that? So instead of starting with and I'm going to bring it back to this innovation concept, instead of starting with what bothers us as an insurer, where our biggest claims are, and how can we force our customers to use tech to solve that problem, we said, let's start with the customer's problem. What are their problems first? And this is what they came to us with. So we built the construction ecosystem. The three components of the construction ecosystem are tech adoption services, which includes a list of curated technologies that we've hand-chosen and negotiated agreements with each of them to provide our customers with special treatment and a discount, because everybody likes a discount. Also benchmarking to help them see where they sit compared to their peers in their tech adoption journey. This has been tremendously valuable to the contractors because they're actually bidding against their peers for the same work. So they want to know, am I better? Am I falling behind than my peers? Insurance solutions that wrap around technology. If you put technology on your project, we will consider reducing the premium, changing the deductible, or perhaps even a rebate at the end of the policy if your results can prove out that that technology dramatically affected your risk. Safe drivers save 40%, not to steal a tagline from another insurer. And then knowledge networks, and this came directly from our customers. Not only do they want to elevate themselves, but they want to do it together. They want to share best practices and learn how to modernize an antiquated industry like construction together, which I thought was really cool. So our mission is to advance construction risk management through partnership, innovation, and invention. And these are the three components that I just talked about. We have our tech library with our list of technologies that all provide a discount to our customers. Our tech adoption maturity index. This is the proprietary benchmarking I discussed. And it's a very white glove service for our top customers. And our Tech Tapas webinar series, small bites of tech, if you will. Education for our customers on what kind of technology is out there, what everyone's doing, and some exposure so that we curate that content for them and they don't have to deal with the influx in their inbox of a zillion technologies asking for 3.5 minutes of their time. Our innovative insurance solutions, we have two on the market that pair technology with an insurance product to provide something to fill a gap on the market. And then our knowledge networks. We have our Innovator Circle and our Collaboratory. Our Innovator Circle is a peer group of the most innovative contractors. They're innovation leaders. So normally the risk managers are the ones we deal with, right? They buy insurance from us. But we're targeting the innovation leaders so that we can get to the source of who's actually purchasing and using the technology. Our Collaboratory is a group of advisors. It's a combination of a laboratory and a collaborative. It's a kitschy name we liked. And then the tech champions are specialists in particular areas of tech that can help our customers get to the right technologies. This is a smattering of some of our techs. We have screened over 610 construction-specific technologies, over 50 plus use cases. We've interviewed in detail over 160 now, actually, and we've chosen 34 to partner with and 42 across the whole ecosystem. We're highly selective. Our Innovator Circle is chaired by 4 of the largest general contractors, largest and most prominent and most innovative general contractors. And as I mentioned, it's a consortium of their peers that is working to elevate the industry and address the most prevalent issues in construction. And they don't have to be insurance related. We're just trying to help the industry get better. And we know that that will translate to them being a better risk, to them being more profitable and being able to grow their businesses. And when they grow their businesses and when they do it with less risk, that translates to our bottom line together. So it's a mutually beneficial value prop for us. The Collaboratory, a panel of industry leaders in construction, insurance, and technology that makes sure we're not just drinking our own Kool-Aid, and they help us with staying on the right course with this whole initiative. Sorry, not sorry for the brag slide, but we won a few awards last year. The Celent Model Insurer of the Year, EFMA and Accenture, Innovation in Insurance, and Property Casualty 360 awarded us Insurance Innovators in 2021, so we're pretty proud of this progress. Some things our customers had to say about this, and this really says it all. So there's been a lot of discussion about the customer experience over the last couple days, and how, and especially in consumer and personal lines. Right? And it's easy to think of that as a target for improving the customer experience because it's one persona. When you think about B2C, it seems a little simpler. When B2B seems like this complex persona of all these different facets and different wants from your customer. But I think that the fundamental value prop is the same. We should be able to provide the same kind of service and customizable and tailored and delightful experience to our business customers the same as we do to our consumer customers. And this is what some of our risk managers and innovation leaders have said about us. We're the business partner. We are a business partner in every sense of the term. The TAMI assessment, the maturity index, has led us to partner further with AXA XL. Truly appreciate what you've done with the Innovator Circle. And then the bottom one I love because this was buried below in a string of an email that the risk manager sent to his own team internally. And then he forwarded it to me, and I happened to read through all the string, and I was like, that's a really nice thing you said behind our back. Can I quote you? And he said, sure. AXA XL is one of the leaders, if not the leader, in adopting technology solutions. This creates stickiness for us and loyalty and new business, and it attracts the right kind of customer. It attracts the innovative, partnership-oriented, risk-averse, and good risk management contractors. We are looking to build, and by the way, we charge for none of this. We are looking to build new business with the right partners. We are looking to retain good business. We are looking to create stickiness in the market and be seen as the most innovative insurer for the most innovative customers. So what if we took this concept that we built in construction and expanded it to other businesses within AXA XL, which is where we're going next? We're going to advance our pair-to-partner initiative through an ecosystem that is focused on global business imperatives across industry verticals, connected through a digital platform. And what I mean by this is the value prop that we saw in construction, we expand across our business. We, as an insurer, as a global insurer, share common business imperatives that everyone is beholden to right now. We need to be tech forward. We need to be digital forward. We need to be more sustainable in the way we do business. We need to affect climate change. And we need to have a focus on talent, people, diversity, equity, and inclusion. And we believe we can take this framework that I just described, services, insurance, solutions, and networks, and apply it to these other business imperatives and really make a meaningful difference in the world. Also leads to better business results, because who doesn't like a good bottom line? Okay? So today's initiatives, we're in the risk management and tech adoption space. This year, we've been expanding into sustainability, and beyond that, we'll look to DE&I to apply these same concepts. So when we think about a construction, or I still feel like I work for a construction company. When we think about an insurance company, we have multiple industry verticals. How do we apply this across these industry verticals? When we have common customers and insuring common assets across our business, we can apply similar principles and connect the dots. We're a bit siloed as an insurance industry, I think. Right, so a lot of insurance industries have GL, they have work comp, they have auto, if we just take primary lines, for example. And then they have the industries inside that, right? You have GL, and then you have construction, and you have a variety of other industry verticals in that. Well, we have a construction vertical. And so if you think about the life cycle of a building for a moment, somebody has an idea to build a building, you have a concept, somebody designs it, then the building gets built, and it's used, like this building, and at some point it reaches the end of its useful life, and we start the process all over again. Well, we as an insurer are present in all the spaces of that building life cycle. So if we can do this thing in construction, and then we can connect it to the other business units across common customers, we can affect the entire global value chain. And what I mean by that is, Facebook wants to build a building in Menlo Park, California. They hire Gensler as the architect. We insure them under design professional. Maybe they need environmental insurance for that. Then we insure them under construction. DPR builds the building in Menlo Park. We're insuring them. We're insuring their subcontractors, all through AXA XL. When they're in business, they're going to need cyber coverage. They're going to need business coverage. They're going to need property coverage for that asset for the life of its building. And then if they sell it, that person's going to need property. And so we're present across the whole value chain and remaining that consistent insurer. So we evolve the value prop like this. Remember, this used to say all the things about construction? We just change it slightly. We're gonna offer smart services, including curated technologies and benchmarking to our customers. We're going to provide them with innovative insurance solutions to support forward-thinking and innovative customers. We're going to create knowledge networks so we can elevate the whole industry together. And we're going to really advance risk management through partnership, innovation, and invention. And that's the AXA XL ecosystem.
Thank you so much. Thank you so much for that, Rose.
Thank you.
You navigated us extremely well, by the way.
Was that?
Yeah, it's great. First class navigator. Okay, a lot to pack in, but so much quality thought in those presentations. Let's move on now, in fact, to the first of our discussions, okay? And what we're going to look at is the technology that's needed to operate and thrive in an open world. And I'm very lucky because I've got two big brains to call on to talk me through the subject. Can you give a very warm welcome to Omri Moore? Please come and join me on the stage. And also Pierre Briganzer. Good to see you guys. Come on up.
Thank you.
Hey, good to see you.
Thank you.
Please take a seat. Okay, great to see you, Pierre.
Yeah, good to see you too.
Fantastic. Okay.
Good to meet you.
Okay, let's get ourselves settled down. Before we actually dive into the conversation, Omri, can you start by telling the audience what it is you do and for whom?
For sure. Hi, everyone. My name is Omri Moore, and I'm a co-founder and CEO of Ratable. We do accounts payable and maths. So we help companies that primarily do over 1,000 business payments a month think through how they can automate that, include more transparency in the process, and then reduce the amount of errors they make when they move a lot of money. 1,000 payments a month can be a lot. 10,000 is a lot more. 1 million gets to be extremely difficult, and the amount of human errors that comes with that is insane. So everything that we think about is how to take less steps but increase confidence in money movement and compliance in money movement.
Okay, fantastic. And Pierre?
Yeah, excited to be here. My name is Pierre Briganzer. I've been in the IT industry almost 30 years, but more importantly, the last 20 has been within the insurance space, mostly in the commercial specialty surety space, but some global in personal space. I have an engineering background. My passion is within architecture. It's about building the right modernized platform and making sure that the platform is nimble to what is unexpected or what to expect in the future.
Okay, thank you so much for those introductions and also for making the time to be here. A reminder as well to you, our audience, that we are taking questions off the back of this discussion. So again, download the app, use it. We'll try to get through as many of those questions as we can in the time available. So let's get down to the talk, because look, what we've learned obviously from the knowledge of everybody in this field and from those presentations is that the insurance sector, it is operating in a landscape that's increasingly open. So given that, how prepared are insurers from a tech point of view to actually take advantage of the opportunities of this open world? There's a lot happening out there. How can they strike gold? Pierre, if I can start with you
absolutely.
And then go to Omri.
I think we still have a big opportunity in the insurance sector. Especially if you think about the bigger companies and the baggage we carry. Think about technical debt. Think about the systems we have that do one thing and one thing good, but we have many of them across. I think I read an article from McKinsey, I think last year the article came out, and it said, here's what you may think about, here's what insurance would look like in 2030. And it was an interesting article because it challenges you to think outside the box a little. And there was a persona like, I think it was Scott. And it was Scott wanted to, he's on a business trip. He wanted to go to point A to point B. So he said to himself, I'm going to go rent a car, but I want a self-driving car. And since Scott uses a digital assistant, he was asking the digital assistant to go ahead and book it. What's interesting is that in this persona, that decision has implications. And part of that implications is the digital assistant could connect to your insurance carrier and say, here is a decision a customer wants to make. And if we have the right data to give real-time feedback, that could influence the decision, give better experience, and give a better result. For example, there could be different routes Scott could take. And based on that route, it could say, hey, this would be a safer route, and it could help you with better premiums, so to speak.
Okay then, Omri.
I like that view of the world.
Yeah.
For me, I think we meet with a lot of insurance companies, and what we focus on is helping first define the process and then identify where the manual tasks are. I think that a lot of insurance companies are still hiring more people to get the same amount of work done. And for us, it's about we work with our customers. We we have this giant chart of all the steps that they're doing and who gets involved. And I think that most of the time what we see is departments operating in silo and not having a conversation. And that's where like maybe the first gap to the innovative thinking is happening. Each department is overwhelmed, they're stressed, and they have to do their manual tasks. And then they don't think about the handoff process in between one another. So when we think about approaching that gap and jumping into innovation, we first of all like to understand what are the maybe 100 plus steps that an innovator, like that an insurance company has to do. And then we cut them down, and then we start highlighting pockets where nobody wants to do the work. And when nobody wants to do the work, that's where you can inject APIs, new software, anything to help reduce the amount of work that's going on. And I think that in order to get to that world, which you're describing, we need to start talking about how can employees think about their job and being excellent at it, and not how to do more tasks. So for us, it's really about looking where software and APIs can be interjected to help people actually be really great at their job and not be really great at checking boxes.
Yeah, it's interesting because you've actually touched on one of the questions I was going to put to you, in fact, the follow-up, and that is the pain points. Because you've identified it really, that you've actually got your chart and you found points where people don't want to work because they don't feel they can do this, so that means the company is not being as effective as it should be. So until you get that point of total efficacy, how is that business architecture evolving? It's clearly not seizing the best of the opportunities. So what is it that we've got now at this moment?
I think what we have now is people with budgets looking to buy technology. And it's a good thing, right? Because that means at least the conversation is starting and they're saying, hey, something's not working as efficiently as we want to, and we want to innovate and we want to buy new technology. The problem is with you buy technology with just your department, and you know this, you're an engineer, I'm an engineer. They don't talk to each other.
That's right.
Maybe they buy conflicting software or something, and the tools don't talk to each other. So I think it's really important to talk across departments and explain one another the pain points, so you can buy software together that helps you innovate, so you don't feel shitty, excuse my language.
No, it's okay, we speak freely.
Okay, about making a purchase, and then maybe you bought something that's a 2-year contract that actually doesn't solve your problem, and then getting the data from that software and help working with your IT team or your data team becomes impossible. And then you're like, crap, well, I got to get out of another contract, and this wasn't the right solution.
Yeah, I mean, clearly it does resonate because you were grinning wryly there.
Yeah, I mean, it's absolutely. I think in the end of the day, it's people, process, and enablers of technology. And it's about collaboration and communication, not just with people and simplification of process, but it's with data exchange. So it comes back to each department, each area has an expertise, and we need the people, we need the experts, but they need to have the right knowledge of that data. So how do we pass data across? How do we integrate data? How do we communicate across? How do we enrich this data? I mean, that's the problem we're trying to solve. In the end of the day, if you give the right aggregation of data to an individual, they can make the best decision possible.
Yeah, because what I was going to ask you as well is how can carriers actually sync the data? Because it's not just for the one-to-one, it has to go into multiple sources, because coming out of that, you've got to have new insight-driven offerings as well, so that people can gain from that. It can grow the business. You can actually pinpoint customer needs with more finesse.
Yeah, absolutely. Think about the underwriting department that really understands the historical context, has the rules that can influence, but these rules have to be shared across, or synchronized across different partners that require this data to make decisions. So it's not about just getting the volume of customers, it's about getting the right profitable customers in a scalable manner. And this is about giving the customer the right data offering so that the customer makes the right decision, or increasing the premium up front so the customer knows the reality of their behavior and what it's causing.
And Omri, would you like to follow on from that? Because really what you tend to focus on, it is the seamlessness to the end-to-end payout workflows.
Yeah, so I see that where we can make the most impact with our customers and help them make the most efficient payments and agent onboarding and broker onboarding and so forth is when they already have the data side of it structured. So I do think that it's extremely important to do two things. One, hire a great data team that can work with IT and understand how to build a profile around who you want to pay or who you want to get paid from. I think that is actually really critical, because if you don't have that information up front, then you're just going to add amount of time to understand what to do next, right? So you don't want, like when we're talking about enrichment, you're talking about a tool or a data platform that will help you understand, all right, I want to pull information from maybe Salesforce.
That's right.
And maybe our internal data, and maybe 5 to 7 different sources to build a profile, and then work with that data team to start segmenting the data and making it easy for a machine or a human to make a decision within a split second.
That's right.
So if you can start there, that's awesome. Then the next step is, can you use that data to say, okay, for example, with us, we want to make sure that payments to agents are good. So is this a trusted agent? Is this an agent where you should be offering instant payments to for settlement instead of 4-day settlement? And we work with teams that are already on Tableau or Looker or other platforms like Metabase to structure their data, and then they just send us instructions for paying them. But a lot of our initial work is to say, hey, what is the process? Where's your data? Do you have that working together? If you don't,
You're
let's not
identifying the problems, basically.
Yeah, let's not start until you have that information, because then I think a lot of the time people come with the right intent.
Yeah.
They don't have those two pieces, and then their kickoff is delayed until they can actually have a clear view of their business or their department's focus.
And that's an interesting point in itself, isn't it, Pierre? Because look, whenever we look at this area, there does seem to be this rivalry between the old players and the new kids on the block, and you could argue that the new digital entrants, they do have that technology advantage when it comes to openness and navigating the open landscape. So given that, how do you think the carriers can compete with the new digital entrants and at the same time play to their strengths? The most obvious strength is obviously their longevity, the customer base. They've kept them so far, but there's always a danger they're going to lose them to somebody else.
Yeah, I think there's an opportunity to build the right relationships between the two, right? Instead of competing, there are insights both can provide to help with it. For example, if you look at the insurance companies, they have a lot of underwriting rules, digital rules. They have a lot of insights in terms of machine learning, in terms of its ability to understand customer behavior, customer habits that influence the quote or the rate, so to speak. That is the advantage that they have. But it's more about how is this going to be exposed easily across these multi-channels, right? And this is really where in architecture terms, we talk about an API framework or an ability to send notifications, to send events, or to have certain services exposed so that different channels can have the data.
I mean, look, Omri, you mentioned onboarding, I believe, when you were telling the audience what it is that you do. Let's stick with that, because look, from your perspective, how do you think technology can actually reduce the cost of onboarding new partners? And I'd like to get your response as well as to that, Pierre. But Omri, if you can go first on this.
I think that it's everything that is critical, because if you have a partner that is a relationship, if you screw up that relationship, they're not going to be your partner, right? So the way I think about it is, if you're going to invite someone to your home, you want to make sure that your house is clean, and you want to make sure that your ambiance is nice, and you want to make sure that the first course is delicious, right? And you want to make sure that they want to come back for a second dinner. I think about that with technology too. You want to make sure that they don't have to create an account for something that they don't want to do. You want to make sure that the communications and the notifications are seamless and timely. You want to make sure that information is shared back and forth. A lot of time when people implement a new technology, they will hoard the information and they will not share it with the partner. But transparency is really critical. And then timeliness. At the end of the day, a lot of what we do is we try to figure out, let's say a broker needs to sign up to get paid. How can we make that happen within under 90 seconds? I'm dead serious.
90 seconds.
Yeah, it can happen 100%. And then how can we make sure that post-onboarding, there's a confirmation sent of what exactly happened, that it's branded, that it makes sure the insurance company looks fantastic, and then the relationship after that, right? Relationships can last decades, right? And I think everyone wants their partners to be there for decades. So we think that the onboarding, it's the first initial piece for an insurance company to show that they're on top of it. And then afterwards, if they have the rest of their framework set up, then it's just about retention. But I think it's very critical. And we heard the Jerry team talk, right, about how important retention is. But you have to balance it with that first experience. For example, I know Art and I know the Jerry team very well. That first download experience is really critical, right? We've all downloaded apps here. If the app is crappy, you stop there. If the app is fantastic, you continue. Yeah, and then you learn and you maybe make a purchase. I think the same thing could be applied for just general onboarding for agents and brokers. It's about retention. We work with a lot of insurance companies, and retention of agents is a really critical thing.
Absolutely.
And if you can make them do less work and increase their happiness upfront, it's really critical.
Yeah, I totally agree. I think the relationship, the word that comes to mind is playbook, right? Having the right playbook in terms of rules of engagement that makes all parties satisfied, have the transparency of what data is needed to make the right decision.
And partnerships are becoming more important, which is pretty obvious given how the sector has grown. Again, that old sort of friction between the new guys, the older players, etc. But how does technology need to evolve so that it can encourage that increased digital integration? So Pierre, would you like to take that and then we just give me
absolutely.
your response?
I mean, we talked a little bit about what a true API framework would look like, but in the end of the day, if you think about our data, especially in bigger insurance companies, we have disparate systems all over the place, and these are what we call as sources of record. I mean, these are key information where it's a policy system where someone enters the data, or it's an omni-channel coming in and it's a prospect of a quote. It's about how can this data, among many other data, be easily available, aggregated together to make the right decision. The data has to be also enriched, so there are third-party information that's needed to be brought in. So in the end of the day, it is about, the tech play is about easy access of the data and the ability to make it available for different omni-channels,
Going back to the 2030 vision, we're talking, I mean, that's not far away.
Yeah, it's not far away.
And so maybe 2040. But what I really want to hit on is the fact that what you described in the 2030 vision is a human talking to a machine, and then machine talks to another machine.
That's right.
Right? We tell Siri, hey, I want to rent a car or whatever, and I want to drive from, I don't know, from Paris to Monaco.
That's right.
Awesome. But in order for that to happen, the data does need to be structured, and the APIs need to be good. So I think that an investment today in making sure that your internal team's data can empower your people to make the right decisions is step one. And then if your internal data is good, then someone will want to partner with you and then let the machines talk to each other in the future.
You guys have this terrible habit of preempting my questions.
So I apologize.
I don't know if that's a good or a bad thing, because you know what? I was actually going to put this point to both of you about successful API-first payment models. Yeah. What do they look like? You've only got them pretty much answered it, really, haven't you?
So just to add to it, besides the ease of use and the availability of it, which is what we've been talking about, there's also compliance. And there's also security concerns. Yeah. So
those compliance rules will constantly shift with the evolution.
Absolutely, and so does security, right? With the cyber threats out there, we want softwares, we want partners to be compliant and to be ahead of it. Also scalability factor, right? We want our partners and services to be cloud available on the cloud, so it can be scaled different regions globally, worldwide, and things like that.
Okay, but look, we've talked about APIs. How can you not have a conversation about ecosystems in the insurance industry without looking at APIs? But I mean, what progress do either of you feel has been made in terms of standardizing APIs? I mean, is it good progress, or is it just a pipe dream too far?
Just a quick note. So APIs are extremely flexible.
Yeah.
So the first thing is like, I don't know, like if you put two plants in the same pot, they'll eventually learn to grow together. So APIs can be flexible, and I think that's kind of like as good as your data and engineering teams are, they should be able to talk to each other.
So it's not wishful thinking. This is more than possible.
It's possible today. I do think at the end of the day, though, it's starting out with talking about what data you want to share back and forth. Like, our software is only good if the customers we work with already know who they want to pay, when they want to pay them, what notifications they want. Yeah. They have to have a structured vision of that future. If they don't have it, then I feel like we spend a lot of our time just solutioning with them. So I believe that the frameworks for the APIs are pretty standard right now. I would definitely like get off a SOAP API and stuff like that. That is a big recommendation. However, I think the innovation will come from partners demanding more out of each other and the data that they want to share. So if you haven't already, I would start that conversation about what data you would want from other partners, and then what data, like what is your moat? What is that leverage point that you can have to share with another partner that can make you sticky?
Yeah. So I'll add to a little bit, historically, and this might tell my age a little bit. Historically, insurance has tried to standardize or create these canonical models. Many of them started with Accord as an Accord standard, and then I remember when IBM came with the IA model out there, which is more an insurance standard. Because in the end, but I agree with you that APIs are so flexible today. It's in the end, it's a matter of mapping. And it's a matter of aligning the one-to-many relationships across of it. Yeah. That said, I think there is opportunity in insurance values to be standardized. So there is the structure itself, but there is values as well. So there are ISO standards out there, or there are standards where we say, hey, we want to create a product, but we want this product to be a commodity. We want it to be built fast. So using the same values or having a data dictionary so we can translate into the standardized values faster can be an accelerator.
Okay, so sorry, go on.
Oh, big plus one to that, because when you're sharing data, you want to be safe.
That's right.
Right, so like if your company doesn't have like a security page detailing like all the things you do to keep your security standard, including your data, I would definitely recommend it, because it is kind of eventually that cue card that you want to be able to pull and say, yes, we can share information and we're going to share it safely, and we've done the work on the ISO side or the SOC side and so forth. Like, you want to make sure that internally compliance and data security is so important, so that is not a conversation and that is not a negotiating point, because a lot of the partnership that you will want to have might fall apart if that's not a part of your standards.
Sure, but look, okay, we've now standardized the APIs, the next level, to carriers optimizing those same standardized APIs to get the competitive advantage. Again, a question to both of you. I mean, how can they do that? And what are the lessons to be learned from both inside the insurance industry and also outside? Because if you set the tone, it's pretty clear in the wider financial services landscape that others will take this and run with it too.
Yeah. I can start with the lessons learned, because
we'll go backwards to forwards.
Definitely have a few. I mean, the cost, right? There is cost to build the foundational framework, especially if you've been in business a while. You have all the intelligence, but you have to be able to share that intelligence. So in the end, we have to put some technology cost in terms of modernization or tech evolution, in terms of how we can go about it, so to speak. But I'll let you, and I'll add to it.
So one of the things that I think is really critical is we just had a presentation on like Knowledge Hub and knowledge management, documentation of your APIs. I think it's really interesting, but a lot of companies have internal documentation, but not external facing documentation. When another company wants to partner with you, they need to know how to structure the data, how to send the data, how to understand that it's good. So investing today, not just in the building it internally, but thinking about how can you document it so another partner can onboard within seconds is really critical, because if you have a resource or a value that nobody else has, and you can share that outwardly, and you can let people rely on your data, that's going to be really critical. But if they don't know how to get started, it's going to be pretty difficult. So in order to bridge that gap, I would invest a lot in documenting your APIs and your software so that others can self-qualify if they want to have the conversation, right? Security, compliance, documentation, And then from then, they can trial it and have a really awesome experience.
Yeah, and there are actually good partners out there that work with several omnichannels. So another way to look at it is that we could partner with someone who's already has integrations, built-in integrations, right? So it's great to say I'm working on this channel, but I can go 6 other channels seamlessly for free because it's compatible.
Yeah.
Okay, you'd actually answered the last question I was going to put to you again, so there you go. Well, I was going to say, I bet you don't know what I'm going to do next, but of course you do. We're going to take questions from the audience because they have been coming through. So guys, are you ready?
Let's do it.
Yeah,
Fantastic.
absolutely.
Okay, what role do you expect insurers to play as digital ecosystems continue to evolve and mature? In other words, projecting into the future, will the insurance companies exist, or albeit in a different form? Because just going back to yesterday, one of the common themes coming across, insurance companies will become technology companies.
Yeah. So I think, if you don't mind, I can start. Somebody said it yesterday, insurance is still a people business. And I'm a believer of that. It's about technology as an enabler, and it's about understanding when we accelerate through technology and when we give it to a person, right? But the individual itself can make faster, better decisions with technology enablers. So think about an underwriter, think about someone in the field who wants to make a decision, and we still, because this is $100 million or $100,000 premium, you don't want to just make the decision blindly. We never have confidence with our confidence ratios. So we say let the human make the decision, but we want to give all the data points right out there so that the human can make that decision in weeks and not months.
I'll start out saying that I think that almost every company wants to become a technology company, right? Just to stay ahead, to partner, to get there. So that should be the standard. But we're talking about insuring humans, right? We're talking about things that are owned by humans. So at the end of the day, it will always be a human-led business. Guess what? The reviews are still going to come in, even if you add technology, right? They're going to say the good, the bad, and the ugly. So you're not going to get away from the humans. And then within your teams, you're going to need also in technology to empower your teams. So I think it's more about thinking about how technology can help you with retention and acquisition, and then both for your customers and for your employees. I think that a team that has the right tools will be happier and will stay at your company for a long time. So I would invest both, within and then with your customers.
Yeah.
Sure. Okay, one last question here before I let you go. What are your thoughts on using an integration layer such as Mulesoft versus direct APIs?
I'm not going to comment on Mulesoft because I don't have.
Okay, so we'll take Mulesoft out of it then.
No, but I think it's it depends. So, for example, there are some integrations that we build directly with a partner because it is a key competitive advantage for us to be the best integration partner with them. And then there's other integrations when we're like, you know what, this layer does 90% of the work. We don't need the last 10%. Let's make it happen. So I would look at it at a case-by-case perspective, but I do think it's a great step, or it's a great part of the conversation, right? I think that every integration and every time you share data or you want to innovate, you could look, do I build it in-house and spend that effort? Is there a competitive advantage to doing so? Or is an interface essentially, would they help us get me to market faster? And if they do, and you get 100% of your value, there's no problem.
Okay.
Yeah, I would say it depends as well. It depends on the maturity of your ecosystem and your apps, right? I mean, there was a time when ESBs were the way to do things, but I think now, if you look at SaaS offerings, they're so much smarter, they're so much nimble, they come with APIs up front. So you don't necessarily have to go through an integration layer to make decisions. What you need is the right playbook in terms of the right digital contract in terms of how you communicate. So I think times are changing, but the answer really depends on the landscape that you have in front of you and the journey you need to take to get out of there.
Okay.
Yeah.
Guys, we're going to have to leave it there, but thank you so much. That was just, there was so much in there. It's great conversation. Thank you.
Appreciate it.
See, they love you. You know, I didn't have to tell them to clap. They love you. They just acted off their own accord. But thank you. Absolutely brilliant. Okay, let's move on to another of our discussion sessions. The theme of this one is insurance in an age of convenience, tapping into cross-sector partnerships. Now, let me give you a bit of a heads up. We have 4 members of this panel. 2 of them are not able to attend, but they have agreed to join us remotely, and 2 of them are in person. So, Cameron Nordholm and Dan Gumpright. This is Dan, this is Cameron. Please welcome them. Okay, and let's extend the welcome to our guests who are joining us remotely. They are Cameron Tucker. Hi, Cameron. How are you? Can you hear us?
Nice to meet you. Doing great.
Fantastic. You look great as well. In fact, we're really relieved that the connection is working. That's the main thing. And also, well, hang on one second. Mitchell Kemper. Mitchell Kemper, I almost said that you were joining us remotely. Mitchell, how are you?
Doing well, thank you.
Fantastic. Where are you?
I'm based out of Columbus, Ohio.
Okay, then, that's great. And Cameron, where are you based?
Over in Seattle.
Over in Seattle. Okay, but look, guys, it's fantastic to see you. Before we actually get into the deep dive of the conversation, can you, Cameron Nordholm, can you actually tell everybody, well, tell the audience what it is that you do and for whom?
You bet, and we'll have to navigate the Cameron problem we have here with 2 of us.
Okay, you're Cameron 1.
Cameron 1, all right. Cameron Nordholm, I'm head of product for a company called AgentSync. We're a technology company with a hypothesis that there's a new category of software needed in insurance with a focus on producer management, integration partners, and basically acting as a source of canonical truth for your distribution growth. So we had an amazing year. Last year grew 500%, have some of my colleagues here. But we're really focused on building a new foundation that supports a lot of the great sort of integration and partnership capabilities we've been hearing a lot about here.
Okay, fantastic. And Dan, very good to see you. If you could tell the audience what it is that you do and for whom.
Yep, so I'm Dan Gumpright. So I actually started my career as a software developer. So the API discussion was fantastic just now. I've been a VP and head of product for actually a bunch of vendors in the insurance space for about 12 years. Then I started kind of consulting in the product realm, how to build new products, how to build new startups. Now I actually work for 10110, which is the incubation studio, the build studio that sits within or under American Family Insurance. So I'm responsible for building brand new products from the ground up where they don't currently exist in the market. We do that really fast. We live with like this fail fast and pivot mentality. So we're building products continually within and adjacent to the insurance market.
Okay, fantastic. Cameron Tucker, can you tell us what it is that you do and for whom?
I'm the Vice President of Strategic Partnerships at Olive.com. We work in the mechanical breakdown, insurance, and vehicle service contract space, really focusing on kind of disrupting and changing the entire category. It doesn't have the greatest reputation. It's been some bad players in the space. We've taken a technology approach and really focused on creating coverage that's fair and transparent and really delivers an amazing customer experience. And we partner with carriers, insurance agencies, and GAs to distribute our products and through API-based solutions, white-labeled solutions, to really give them another line of coverage to offer to customers and really help make a positive impact on their business.
Okay, thank you so much for that. And Mitchell, again, the same to you. If you can actually tell the audience what it is you do and for whom.
Yep. So I work for State Auto Insurance, leading State Auto Labs, which is the innovation and corporate VC arm of State Auto. So part of my job is looking for new and emerging technologies, startups that we could potentially partner with as part of the core business and start integrating those new solutions. And then the other side is with our $25 million State Auto Labs fund. We focus on making investments in early stage companies, continuing to support them through their growth through additional funding, as well as partnership opportunities and direct access to the business leaders to help them understand the insurance space better.
Okay, thank you so much for that. And also thank you to our whole panel, in fact, for being here. Very busy people. We appreciate the fact that you've taken the time out to join us, albeit remotely and in person for some. But look, whilst we're here, a reminder as well to the audience that we will take questions at the end of this panel. You've got the app, so please do feel free to send your questions. Whatever you send to them, they can handle it. Don't be shy. Okay, let's crack on. The opening question goes to all of you. So Cameron Nordholm, if I can start with you first, or Cameron 1.
Cameron 1.
Yeah, and then we'll move it around, okay?
Funny, I'm used to having lots of Dans, so having lots of Camerons is a great surprise for me.
Right, and this is why you're grinning from ear to ear, really, isn't it? I'm not used to actually chairing panels with people who happen to share the same name, but let's see how we get on. But look, we've heard a great deal about this word ecosystem. It's always dropped into conversations. And what I want to get from all of you is how you personally define ecosystem. What does it mean to you, Cameron?
It's a loaded question. I think at AgentSync, we have a very opinionated view about the insurance industry. And it really comes down to the fact that it is an ecosystem. It is a set of partnerships, relationships. If we think about the relationships between agents and carriers, MGAs, agencies, all of whom we work with, we look at the data and we see that the lower quartile of agents, for example, have a dozen different carrier appointments. If we look at the upper quartile, we're talking about 100 plus. And so the industry has come up and built this ecosystem that today I think we don't actually capture and reflect in the way that we build experiences. Now, if we look ahead towards what does that sort of ecosystem 2.0 look like? It's not just about distribution management and sort of building an effective network. It's also about how do you leverage external partners cross-functionally or sort of cross-domain so that you can embed, so there's a lot of topics we could dig into, including embedded insurance, opportunities to leverage partners in that context, but extending your ability to reach consumers, businesses, the insured on any platform in any context. That's something that I don't believe we're doing effectively. And so to build that ecosystem 2.0, it's not going to be about spot solutions. It's going to be about extending sort of embedded opportunities everywhere. There's a lot of foundational work that has to happen before that becomes a reality. So I think like ecosystem 2.0 is where I go. I think that is a network of partners and distributors that sit underneath it that requires a tremendous amount of reinvention at the foundation level around technology.
Do you agree with him, Dan?
Yeah. So it's difficult to define an insurance ecosystem in 4 different ways, but I guess I'll add a little bit to that. So, I don't work for a specific vendor, so I look at a lot of companies in the insurance space. I built a bunch of claims automation systems as well that obviously require a bunch of partnerships in this space as well. One of the things that I think is key between kind of just partnerships and an ecosystem is something that Rose actually said when she spoke earlier, which is looking from the customer lens. So looking from the customer's perspective, what does the customer want out of what you can offer? And I'll give you an example of a few examples that I think are relevant here. So it's all about interconnected systems, but it's about having a seamless interaction from the customer to your system, right? So the customer shouldn't see that they're buying through an ecosystem. They should see that they're buying through a single entity. So one of the ones that I found fascinating is I worked with a Japanese insurance company several years ago, and I won't state names up here, but they were actually selling insurance through Line, right, which is the equivalent of WhatsApp in Japan. It was an absolutely seamless interaction with Line. They didn't see any different vendors involved. And the other one that I really like is I bought a Tesla last year, and anyone who owns a Tesla is obsessed with Teslas. So, one of the things that I found fascinating, I live in Arizona. I don't live in the UK like the rest of these folk, just because of the accent. But they opened up Tesla insurance in California, Arizona, and a few other states. And I haven't bought Tesla insurance yet, but it's a seamless experience. Again, you don't have to fill out any of your details. You don't have to fill out your driving behavior. You don't need another telematics system. You just say, I want to opt in to Tesla insurance. And that opens up that ecosystem of insurance, even though Tesla is not the one underwriting the coverage, right? I think it's underwritten by one of the tier ones that competes with us. But it's all about that seamless experience. So that's, like, to add to what Cameron once said, it's all about that seamless experience, but providing lots of different solutions from a single entity, from a single vendor.
Okay, so Cameron Tucker, Cameron number 2, can you give me your definition of what an ecosystem means to you?
Yeah, absolutely. And I think Dan and Cameron did a great job kind of summarizing. And I think the interesting thing about the ecosystem is everybody has an entirely different definition of it right now. It's not cohesive across companies or anywhere that you're going to find it. So to me, it really comes down into that API, the tech, and the products that you're able to offer. Being able to have something for every customer and what they're looking for. Everybody owns different things. They have different lifestyles. They have different levels of coverage or things they want to protect. Being able to address all of those needs in a really personalized way that feels extremely cohesive, that is completely seamless, is extremely well integrated, and like Dan said, the customer has no idea what's happening in the background. They just care that this is a super simple, quick process that's going to be addressed, whether I'm doing it online, over the phone with an agent. It's all seamless, simple, maybe a singular payment bundled in together. And the more that insurance carriers can get towards that extremely simplified experience, the more they're going to capture the customer, keeping them, expanding lines of coverage, improving their retention. And also being able to tie all of the data back into a singular spot also goes into the ecosystem play here, because then you're going to be able to start more personalized marketing and only getting to what the customer actually needs and really impact that customer experience in the end.
Okay, and Mitchell, your take on that. I guess there isn't going to be that much deviation with your views from what you've heard.
Yeah, I was going to say I get the enviable spot of going last out of a bunch of great answers. But what I kind of look at it as is the ecosystem of you have your core skills of insurance, your underwriting, claims, being great at matching rate to risk, but then you also have to consider what distribution looks like, how insurance products are distributed, all the different channels and how they operate together. And then, I think the last piece, which everybody's touched on to an extent, is what disruption or change is happening in our industry compared to how it's traditionally operated. I think is an important piece of the ecosystem, across both of those previous areas of core skills and distribution. And, do you lean into those or do you try to keep the status quo? So that's kind of how I view the ecosystem today.
Okay, fantastic. Cameron Nordholm, or could I just call you Cam1?
I'm fine with it.
It probably makes life a lot
let's run
easier
with
for
it,
all
yeah.
of us, actually, yeah. But I mean, look, what has come out of those 4 definitions is the fact that you've got a lot of technology coming through from different sources, and the ecosystem itself is changing because of the developments that are happening within. At some point, it may change the definition even further. But what are the key changes that you've noticed, and how do you see ecosystems developing into the future?
I think when we talk about sort of a shift in paradigm that I was mentioning before, I think something we see that's common across all these answers is, yes, there's a need to implement technology, identify new partnership opportunities, and we've heard a theme, which is like APIs, technology, how do we exchange data efficiently? There's some missing components to that, in my view. In my view, what we are building, so APIs are not a means to an end. In some ways they are, but they're not, they don't have value in of themselves. And to go back to my point about insurance itself and sort of the distribution model that we have today is already an ecosystem. In my view, there's an opportunity to build it in a more opinionated way. And by what I mean by opinionated, I mean, how do we accelerate the ability to onboard partners, onboard production or production expansion opportunities. And that requires a more opinionated, more standardized way of looking at how that happens throughout the industry. It's something we're very focused on. We're also very focused on how do we make it so that whether it's customer, agent, agency, producer identity, how do we make sure that that is common and consistent across all these different spaces? Because if we're going to create great customer experiences, both for the insured as well as for our production partners, They need to, it can't take 20 days to onboard, right? It can't take 20 days to appoint, which is the average time it takes to get appointed with a new carrier. And so that problem, sort of papering over that problem with technology, as we expand partnership opportunities, it only increases sort of the operational debt, if you will, on top of the technology debt. So that's sort of, we view partnerships and expansion in the ecosystem as needing a better foundation. Obviously, it's something we're focused on building, but whether it's through us or as carriers and MGAs think about their core infrastructure, getting that foundation incredibly solid before you go and start trying to partner out is really, really important.
Sure. Let me follow on from that actually by going to you, Mitchell, because given what is happening, is it really feasible to design a long-term ecosystem strategy? Can you have one?
Yeah, so I think it's definitely possible to create a long-term ecosystem strategy and be successful. And this kind of goes back to my answer on the first question of, you need to stay true to the core insurance principles of having great models, having sound underwriting, being great at matching rate to risk, figuring out the distribution channels and partners that work best for you. But you also have to continue to keep an eye on what's going on in the market. What are the changes that are coming? What new data sources are available? What new partnership opportunities are available? For right now, and I think in the future, the IA channel, the independent agent channel, is still incredibly strong and make great partners. But as they evolve into different models, so do the areas where you can sell insurance. Cameron, I think you mentioned embedded opportunities, and you can go down a huge rabbit hole there of when you purchase a new vehicle, almost any object, you can buy insurance right there as part of the process. So figuring out how do you play in that space as well while maintaining those core insurance principles, I think are how you start to build a long-term successful ecosystem opportunity.
And Dan, let's stay with the idea of embedding, because yes, I can see the advantages if a company embeds into an ecosystem, because you gain access to capabilities that you might not necessarily have in-house. But how can you then use those capabilities to create a better, stronger experience for customers? Get it right, you knock out the issue of retention really, because the customer is happy and it becomes a word of mouth thing.
Yeah, so it kind of goes back to what I was saying before. Which Rose mentioned, which is, you want to create an ecosystem or a platform for your customer where they can get as much as is feasibly possible under one roof. And you want that to be kind of across the board. You want it to be seamless. I mean, customer retention is all about customer experience. It's about customer happiness. I actually, several months ago or just under a year ago, I was part of a huge claims automation initiative that I mentioned before. One of these pieces, or one of the aspects of designing this claims automation initiative was, no insurer has everything they need in-house. So if you're assessing the valuation of certain items, you need to go externally. If you're evaluating, the damage of a vehicle, yes, you're going to have some people internally, but you have to go externally. We basically created all of the partnerships that we needed with, as Omri was saying and Cam was saying before, with strong players who have really strong API connective capabilities, right? And that was key. Like, it was about, we actually did a lot of tech due diligence, and we said, okay, is their technology going to work every time the customer goes through this system? And as this customer came in and made a claim, we basically seamlessly took that claim through so many different systems and avenues. The customer saw none of this. All the customer saw at the end was, your claim has been approved, here's your payment. Or your limit is X, we're paying you Y because you didn't hit your limit based on this, or you hit your limit, we're paying you your limit. And what was vital there is, the customer experience, it wasn't about kind of, okay, we've got customer experience of, oh, they go to this vendor and they have a really good experience. They go to this vendor and have a really good experience. It was all about that absolutely seamless transition between, I think we integrated with some of our claim types with 7 to 10 different systems and different solutions for a single claim. And I would say, there's a lot of discussion about no-touch claims. I would say this was kind of no-touch and right-touch claims. So when it hit the right person at the right time, it had all of the right information in there. They could process that as quickly as possible and go on to the next step. So I think actually like improving the customer experience is all about embedding in ecosystems, but then, as I said before, making sure that the customer sees none of that throughout the process and just sees the end result, which is hopefully a positive experience, and that retains customers in the longer run.
Yeah, let me follow that up actually, but with Cam too, because look, given what you've heard and obviously what you're seeing from your position at the rock face, do you think we'll reach a stage where customers in ecosystems will actually say, look, we demand more personalized products?
Yeah, and I would say that they already are. I think customers today, given how they shop for pretty much everything online, they expect to be able to get whatever they want whenever they want at their fingertips. And players in the space that are able to deliver that in a very seamless way that's consistent across purchasing auto insurance, life insurance, health insurance, are able to start, delivering a really impactful experience that feels personalized to the customer. And it really comes down to picking the right partners that have APIs that can help deliver the seamless experience on the front end and the back end when a claim happens. So the customer is always going through the exact same type of experience and from a brand. But also, as you think about, what products you want to select, it really comes down to how well we know our customers, what things that they want coverage for, what they want to protect, and how do we find and select the right partners to address those needs, and then personalize and send only targeted messaging, marketing, distribution channels that work for that customer, and not just sending any kind of thing, just, hey, we have this, don't know if it applies to you, but we've got it, so you should come check us out.
Okay, let me throw this out to all of you, and I'm afraid we're going to have to be quite tight with our answers as well, so I want to squeeze in some questions. But Cameron 1, how do you see the burgeoning data ecosystem fundamentally changing the insurance sector? It's a big question, I'm really sorry.
Data's great. I think there's two sides to it. There's the insured side and the distribution side. On the insured side, I think others here can probably speak to it much more eloquently than I can. But it's a transformative, right? So the ability to partner with the insured, whether it's personal, whether it's business, underwriting more efficiently, more effectively, but also partnering from like a risk management perspective. The data we have available for insureds is incredible. On the distribution side, I think that we are just starting to see how data insights can actually power distribution growth, right? So we've been talking about partnership, we've been talking about building an ecosystem. The amount of data that we have line of sight into is really exciting because it starts to actually visualize the entire U.S. insurance industry as a network of distributors, product manufacturers, and those in retail, and identifying distribution opportunities in the shortest path to growth. I think is an incredible opportunity on the distribution side.
Dan.
Same question.
Same question.
Yeah, so I don't have anything specifically more to say. I think kind of, burgeoning data, like ecosystems are all about data, right? They're all about data solutions. I don't think it's, I think every session of every conference at the moment is about big data. How do we deal with all of this data? I actually think it's how do you deal with all of this data in a clean way and integrate it in the right way, right? So it's not about having the most amount of data, this like burgeoning amount of huge data sources coming in. It's about having the right data, the right systems in place, and the right use of that data. And this kind of comes back to what I said before. It's about having the right data at the right time and using it in the right way, right? And that's kind of what I always come back to when I speak to insurance carriers and when I've consulted for insurance carriers in the past prior to this position. It's all about having the right data at the right time in the right place. And that's not an easy thing to do. It's a really easy thing to say. It's not an easy thing to do. And it also requires connecting to parties and vendors and software companies that have really good data structures and really good API connectivity.
Okay, and can I have the response of Cam1 and Mitchell, I beg your pardon, two Camerons, I'm getting confused. But look, it was to that original question about the burgeoning data ecosystem changing insurance from your respective positions. And if you could be brief, please, could you address that question? If we can go to Cam1 and then Mitchell, Cam2 and then Mitchell.
Yeah, very confusing for sure.
It is very confusing.
You know, I think Dan hit it right. It's what you're able to do with the data, and you know, a lot of big data companies that have collected millions and billions of points of data have completely failed because they haven't found the right use cases to be able to capitalize on that and find value in it. So the more that you can do to empower all of your teams to have access to that data in ways that make sense for each internal team, to improve the KPIs and metrics that they're trying to achieve, that's really critical from a business standpoint. And I think from insurance companies overall, it changes how you have to hire. Really, you have to start hiring a lot more BI teams. You have to start hiring a lot more data teams and developers internally, while still finding the right partners to help you make sense of all of this data.
Okay, Mitchell.
And you know, definitely agree with Dan, and you know, looking at this of the lens of we have access to so much more data now than we did 5 to 10 years ago, and thinking through, we might have 100, 150, 500 different data points to look at, but how can you understand what are the right data points to look at? What are the meaningful, you know, 50, 75 data points that you can look at, analyze, that you're doing that better than others in this space? I think that's where you really start to separate who wins and who loses in the space, and it's going to make more of an impact than maybe people think right now.
Okay, and Cam Norton, what value-added services, experience, and capabilities do you think that customers are going to expect from insurers? Because they're a lot more savvy in terms of what they want. And you know, if they basically say, look, we want things which are a bit more embedded so that we can have a smoother journey, then you know, you're dealing with razor-sharp people, really. They've changed.
Customers are very sophisticated now. It's all about differentiation. It's all about how you differentiate yourself in the market. And when, you know, property casualty on the consumer side, you have, I would argue, mostly undifferentiated products, no offense. What that customer experience, obviously what the journey looks like, but also what the ongoing value looks like. So how do you support drivers and help them be better drivers? How do you help de-risk the home? How do you help customers, how do you partner with customers, I should say, in de-risking their lives and protecting what matters most to them? There's a huge opportunity there for insurers, and I would argue for agents and agencies, where they are not focused so much on product, but they're focused really on the home, on lifestyle, on how do you support your customers every day. There's incredible opportunities to use data, to leverage that, to identify underinsured spaces, to identify risks and opportunities, and it's all about building a better relationship with the customer.
Sorry, you wanted to add?
No, I'll leave it there.
Okay, that's fine, because look, I'm conscious of the fact that time is winding down. So please, to any member of the audience, if there's a question that you want to the panel, then please do it now, because I'm going to have to close out at the top of the hour. So please, any questions, be very, very quick. In fact, we've got a question now. So guys, are you ready for the questions?
Absolutely.
Okay, fine. Amongst all the available data you have access to, how do you decide what data is the right data? The word right is in inverted commas. I'm going to bat this around the panel. Dan, can you start first, and then we'll move it around? I'll
happily start. You know, it's choosing the right data. I always flip to what is my customer looking to do, right? And it's always focused on what is the customer looking to do, and then what data is required to do this task. So, I mean, this is the same with any area of product management. Like, product management is about being customer focused and looking at the customer and seeing what the customer sees, and then saying, okay, what data do I need to support that? So that's how I choose the right data for the right task. I look at the customer first. I look at what what problem we're trying to solve before I look at the solution. And I know that's really hard to do, right? People, I'll spend one more second on this. Yeah. But you know, a lot of people in carriers will go around the events and say, okay, I like that solution. I like that solution. I think it's really good to come to these events, for example, and say, what are the problems that I have? What problems do I have to solve? And then what are the solutions and what's the data out there that's actually going to solve my problem?
Okay, Mitchell.
So probably similar path as Dan, but I would look at which pieces of data have a direct impact on the profit and growth of my insurance company and how I distribute that to individuals to make it affordable and available. So going back to, I believe, what Cam 2 said of how do you make a product highly personalized in bringing in those additional data sources? You can really understand somebody's behavior or what their property is to offer them that, you know, more specific product for them, as opposed to looking back 10, 15 years of, hey, we just use the traditional methods of data and that's it. Now you can look at what pieces, whether it's aerial imagery, getting an inside look at the home, have a direct impact on my profit and growth as a carrier.
Okay, Cam 2.
Yeah, I think it really comes down to really well-defined goals of, you know, business units, your enterprise overall. Like, what are you trying to accomplish based on the problems that you've defined that you have as an organization or your customers have individually? Once you really have clear goals in mind and clear problems in mind, decision making now is all about finding the right data and identifying what are the data points. And I love collaborative brainstorm sessions of not trying to solution, but trying to think about what information do we not have today that we need to have in order to be able to solve this problem. And just getting input from different team members that are highly involved in this process often is the best way to then go to your data teams that can, you know, run any number of reports and try and create these views for you of saying, hey, here's what we think we're missing and what we need to start looking into from a data perspective.
Okay, and final word to Cam 1.
Yeah, I think it was said before, but defining the objectives first is absolutely key. Don't let the availability of data or certain data points drive your decision making. Don't confuse the signal that you have for the overall signal, right? The overall signal is going to be determined by what the customer objective is, what the needs are. And so starting there and defining what data do I need to, you know, answer this hypothesis or create this experience, rather than starting with the data that you have, is really important, because then you get blinders on and you can end up going in the wrong direction.
Okay, thank you so much for that. And sadly, that is all we've got time for. Thank you for that person for sneaking in that question. Remember, whenever we have these panels, don't be afraid. You've got these guys for a limited amount of time. Make the best of them. But thank you so much for a great discussion.
Thank you.
To those members of the panel who are here and those who have joined us remotely, Cameron and Mitchell.